Welcome back everybody. Thank you for tuning in to today's video. In this video, I'm going to be breaking down my first FTMO profit split on my new 200K funded account. Now I've traded with other firms in the past, but I just recently got funded with FTMO. They've been fantastic so far. I've got nothing but good things to say. So I wanted to break down the payout process and the trade that I took in order to achieve this payout. It was literally one single trade. So what we're going to do in this video now is go over my metrics dashboard on the FTMO website. I'm going to break down some of the statistics that are being shown, and then we're going to head over to TradingView and actually break down the trade step by step, how I entered, how I managed it, how I exited, etc. So without further ado, let's dive right into it. So taking a look at the metrics dashboard on FTMO, you can see that the equity curve is pretty straightforward. It was literally just one trade, so this portion of the video is going to be pretty quick, guys. If I just scroll down a little bit, as you can see, the max daily loss was perfectly intact. There was $1.5 thousand of drawdown, so really insignificant, less than 1%. Max loss was obviously respected as well. And then you can see that there was a profit of 9,200 USD. Here it says the profit split was paid out. And let me just scroll down a bit more. Nothing to really go over here because literally it was just one trade. But down here you can see the actual trade itself, and you'll see that it was actually almost 8 days of holding time. It says duration right here. And it says 7 days, 21 hours, 35 minutes. So it was quite the hold. Now we're going to go over why this was the case when we go over to TradingView, but I just wanted to point out some of these stats first. Now you can see that it was just under 80 pips of profit, very small commission paid, and no swap fees, which is really good. The FTMO conditions have been fantastic, like very tight spreads, no swap fees really, like it's been good so far. So I've got nothing but good things to say. Now, there's not much else to talk about here, to be honest, but I will put up proof on the screen that I was actually paid out. I have the certificate and I'll show the actual deposit as well into my bank. It was lightning fast, to be honest. Like as soon as the account was evaluated, they just immediately sent it out, and within like half an hour, it hit my bank account. So very, very fast. I'm very impressed, especially in comparison to a lot of other firms. There's a reason that FTMO has been #1 for so many years. So with that being said, I'd like to head over to TradingView now, and we're going to break down in detail why and how I entered this trade. All right, so let's get to the good stuff. We're now looking at TradingView on the 4-hour time frame. Now, as many of you know, I only trade on the 4-hour time frame. That is my strategy. I've explained it for free on this YouTube channel. So if you don't know what I'm talking about, if you're new to the channel, definitely check out my previous videos because I have full strategy breakdowns of this exact style of trading. So it's very, very passive. It's only on the 4-hour time frame. But with that comes the possibility of potentially holding trades for longer than most would feel comfortable with, right? So as I went over in the metrics dashboard on FTMO, this was just under 8 days of holding time, which might make some people uncomfortable. But later on in this video, I'm going to talk about some psychology things around that could really help you grasp this concept even more, and it might explain why I'm comfortable doing this, because I think there's a lot of misconceptions about trade frequency in relation to profitability overall, and I'd like to break down some of those mental blocks that people have when it comes to swing trading. We'll get to that later in the video, but for now I want to talk about this actual trade and the reasons I entered it and how I managed it. I'm currently in replay mode, of course, because this trade happened a little while ago, so I don't want to be distracted with all the price action that happened after this trade. But as you can see, this is the trade right here. So now I'm going to use replay mode a bit more to bring price back to this point here, because this is where the opportunity would have been identified. Now, the reasoning behind this trade was quite simple. As you can see in previous price action, we were trading to the upside. Price was pretty bullish. You can see these huge impulsive movements to the upside, but then we began consolidating in this range right here. Obviously, when you're inside a tight range like that, it's pretty much untradeable. There's certainly opportunities on lower time frames, but for my strategy personally on the 4-hour time frame, I'm very patient and waiting for more clear directional bias. So when we're in a range like this, I'm not interested in trading. As you can see, I've identified 2 breaks of structure here. I've annotated that on my chart. Now, these breaks of structure are the first step for me to identify a trading opportunity. I need to see structure violated in a significant manner, either to the upside or to the downside. And that is the first step in my trading plan. I need a clear directional bias, and then I tick off other confluences afterwards. So this first break of structure here, that signaled to me that we were potentially breaking out of this sideways range. So pretty straightforward. And once that break of structure occurred, I then went back in time to identify where liquidity may have been taken because that obviously adds confluence to my overall bias of price moving to the downside. So because I have a short bias here, I wanted to see buy side liquidity being purged. And I identified that there was a clear liquidity purge from this high right here. Starting over here, move all the way to the right where the arrow tool is pointing. You can see that price swept liquidity from that high and afterwards started showing significant momentum to the downside and started violating structural lows and printing new lows. So to me, that's a clear sign that bearish momentum is now taking over and we should be looking for short opportunities. So this first break of structure definitely presented an opportunity to enter short. Let me use the replay tool again and bring price back further. So I did not take this trade, but technically this would have fit the strategy too. Swing high to swing low, enter at the premium prices. We tapped right into that and then pushed to the downside. So that would have been an opportunity. I didn't take that for two reasons. One, I don't think I was even looking at this pair at the time. So that's probably the main reason if I remember correctly. But also this would have been a bit riskier because as I just mentioned, we were trading to the upside for quite some time and then ranging. So having a short bias now is technically anticipating a reversal. And reversals are inherently more risky than continuation trades, of course, because you're betting on not betting on so much, you're asking so much from the market, right? So it's better to wait for that extra confirmation. In this case, that extra confirmation would be another break of structure to the downside because that's basically confirming this new trend that we're in. So let me delete this fib tool right here and we'll focus more on the current opportunity at play. So this is pretty straightforward. We have a swing high. Let me annotate it with the highlighter tool. Sorry, we had a swing low, swing high, price printed a new swing low. And as soon as this break of structure happened, that's when I dragged my fib tool from the swing high to the swing low, just to identify premium prices. And for me, I always enter a limit order at the 71%. And it's as simple as that. The price tagged me in. And from this point on, it was just a waiting game. Now, as I play price forward, you're going to see that unfortunately, there was quite a bit of consolidation here. And I'm not going to lie to you, it was difficult to hold. But overall, I trust my strategy. I've seen this situation enough times. Whether the trade wins or loses, it's not going to make or break me. It's not going to change my life. So that's a way, thinking about it like that is a way for me to detach from the outcome. And that allows me to actually hold the trade much longer than most people would be comfortable holding a trade because I don't care whether it wins or loses. Now, another thing I'd like to mention is that within this consolidation here, most people would be questioning their trade idea. However, you have to look at it objectively and think to yourself, okay, what was the reason I entered the trade to begin with? Well, there's a bearish range right here from the swing high to the swing low. So technically speaking, the trade idea would only be invalidated if one of these swing points is violated, right? If price broke through the swing high to the upside, then obviously the trade would be invalidated. If price pushed past the swing low here and hit my intended target profit without tagging me in, for example, then the trade would be invalidated. But because we were still trading within that range, that means that literally nothing has changed from the moment I entered the trade to, whatever point it was during this consolidation. People struggle with this a lot. They're always wondering, like, should I exit the trade? I think it's a bad trade now. Well, remember the reason you entered the trade to begin with. Has that reason changed, right? And in this case, during this ugly consolidation, sure, it's not ideal to be holding a trade during a consolidation, but the trade idea itself never changed. So with that being said, I have to trust my system and just be patient and hold it. And I'm glad I did because inevitably price reached the downside target here and hit my take profit. So overall, it was a really good trade. It just required a lot of patience. Now, I'm really hoping you guys are starting to see how simple this strategy really is. As I said, I have this entire strategy broken down step by step for free on my YouTube channel. And this is literally what I trade. Like, I showed you guys the FTMO metrics. I showed you guys the proof of payout. And it was literally just this one trade. And this brings me to my next point, basically about how there's this huge misconception about trade frequency in comparison to overall profitability. First of all, I know that January is a slow month. The conditions can be a bit iffy. That's most likely why there was such a consolidation in this trade. That's pretty typical across the whole market during the first few weeks of January. But the point that I'm getting at is that I traded one single time and managed to get almost a $10,000 payout from FTMO. And then there's people who are like scalping the 1 minute time frame, spending hours a day on their charts just to have like a break even month. So I could take 20 trades in a month scalping, or I could take this one high probability trade that I know has a very high win rate. And there's no stress for me. Like, there's no stress on my end because I can just back away from this and go do other things. Like, when this was consolidating, yes, I would check my phone a few times a day. But overall, I had complete freedom throughout the day to go spend time in the gym, play guitar, focus on being a good father, you know? Like I'm focused on other things. So this strategy is, in my opinion, as passive as trading can possibly be, really. I'm sure you could go up a time frame to the daily as well, but for me, the 4 hour is the sweet spot between trade frequency and like a passive trading lifestyle. But this just goes to show really that you don't have to trade like 15 or 20 times a month on the low time frames to achieve profitability. You literally only need one good trade per month. The majority of traders have an issue with undercapitalization, and that's really the main issue. If you're undercapitalized, you're going to feel like you need to do more work. You're going to feel like you need to take more trades in order to achieve your goals and be more profitable. When in reality, the real underlying issue is that you don't have enough capital. Because when you do have enough capital, you can literally trade once a month, just like this. So my main point is trade frequency has absolutely nothing to do with overall profitability. Knowing that fact allows me to hold trades for as long as I do. Now, don't get me wrong, sometimes these trades can last a day or 2 days, 3 days, but every once in a while there are trades like this where it lasts like 5 days, 7 days, 8 days. You know, I'm not gonna lie to you guys, I would prefer it to be faster as well. But overall, I do trust my strategy, and I know that my numbers are better when I don't interfere with anything. So I'm not gonna manually interfere with this trade just because it was taking too long, because who am I to say it's taking too long, right? The market does what the market does. I'm just going to let it play out. I'm going to let the strategy play out so that my numbers can play out over time. The whole point in having a solidified strategy is to have an edge over the market, right? If you interfere with that edge, then you're going to have skewed numbers all the time. I'm a firm believer in not interfering with your trades, because then your numbers can actually show you real data over time. So I know I ranted quite a bit there, guys, but I really hope you guys took something out of this video, something valuable. Hopefully you gained some insight into how I'm able to hold these trades for so long and the results that they can actually yield. Literally, guys, I took one single trade and this is what it looked like. Not to mention, I have multiple prop firm accounts and personal accounts linked on a copy trader. This trade was sent across all of them. It can be quite profitable. And like I said, the problem that most traders have is actually undercapitalization. Luckily, these prop firms can solve that problem for a lot of people. We don't all have, 20, 30, 40, 50K to put into a personal trading account and generate significant profits from. So these prop firms really allow you that opportunity to fix the undercapitalization problem. And that way you can really work less and earn more. You shouldn't have to force trades to make more money. So I really hope this provided some valuable insight for you all. I hope that you take some of this information and apply it to your current or upcoming prop firm challenge. And I hope that you have a more peaceful time during that challenge and hopefully yield better results because of it. So thank you all for watching this YouTube video. Please hit the subscribe button, like, comment down below if you enjoyed this, and I will see you all in the next video.